Groceries, up. Rent, up. Car insurance, skyrocketing. And no, your paycheck hasn't kept up. So what's going on? This is FinTech Central, and today we're breaking down exactly why everything costs more in 2025 and what you can actually do about it. Welcome to the channel where we break down complex financial trends, explain what they mean for your future, and help you stay ahead of the curve. Let's start by zooming in on inflation. First, what exactly inflation? Put simply, it's when prices rise across the board and your money buys less. Think of it like a slow leak in the value of your wallet. If a loaf of bread cost $2 last year and now costs $2.30, same bread, just more expensive, you're seeing inflation at work. Now, this usually happens when there's too much money chasing too few goods. But inflation isn't just about money. It's also about mindset. When people expect prices to go up, businesses raise them preemptively, and that expectation becomes reality. Here's a quick analogy. Imagine you're playing Monopoly. Midway through the game, the banker hands everyone an extra $500. Suddenly, properties start selling for way more. Not because they're better, but because there's more money floating around. That's inflation in a nutshell. There are two main types. One, demand pull inflation, which happens when demand outpaces supply. And two, cost push inflation, when companies raise prices because their costs went up, like raw materials or wages. We track this using something called the Consumer Price Index, or CPI. It measures how much prices are changing for the stuff you use every day, like food, energy, housing, and healthcare. Okay, now that we've covered the basics, let's rewind a bit. What actually caused this recent surge in inflation? Between 2020 and 2023, we had a perfect storm. Governments worldwide pumped trillions into their economies during the pandemic. Central banks slashed interest rates to near zero. Money was cheap, and lots of it was flowing. Meanwhile, supply chains broke, factories shut down, ports got clogged, goods became harder to get. Then, when the world reopened, boom, everyone started spending at once: travel, home upgrades, new cars. Wages rose, rents went up. But here's the twist: inflation didn't just spike, it stuck. Because once people and businesses got used to higher prices, they didn't go back. For example, used car prices in 2022 were up more than 40%. A global chip shortage meant new cars weren't being made fast enough, so everyone piled into the used market, and prices exploded. That kind of price shock doesn't unwind overnight. So now, in 2025, the question isn't why did prices rise? It's why are they still high? Let's break that down. First, tariffs and trade wars. Trump's tariff policies are back. Imports from China, Europe, even some allies, are now more expensive. And global supply chains? They've shifted. Companies are now friendshoring, moving production to countries like Mexico or India. It's safer, but it's also more expensive. Second, energy prices. Oil and gas markets are still volatile. Conflicts, OPEC decisions, and the green energy transition are all contributing. Countries are investing in renewables, but in the short term, energy costs are anything but stable. Third, housing. Interest rates are still high. Builders are hesitant. Supply is tight. And millions of renters are locked out of buying homes. So demand for rentals pushes prices even higher. Fourth, insurance and services. Car insurance, up 20%. Health insurance, rising. Groceries, still stubbornly expensive. Why? Because companies are repricing risk. After years of supply chain shocks, natural disasters, and labor shortages, insurers and service providers are charging more to cover their bases. In places like California and Florida, some insurers have pulled out entirely due to climate risks. That pushes premiums up for everyone, not just the people in high-risk zones. And finally, corporate pricing power. Some companies are raising prices just because they can. When people expect inflation, companies have cover to hike prices more than necessary. Profits rise, even as their actual costs stabilize. Margins are up, prices are up, and consumers are the ones paying for it. And it's not just groceries or gas, it's streaming subscriptions, airline baggage fees, even shrinkflation, where the product gets smaller, but the price stays the same. So now we ask, can't central banks fix this? Well, not really. Historically, central banks raise interest rates to cool the economy and bring inflation down. But this time, that tool isn't working as well. Because this isn't just a demand issue. It's structural, it's supply side, and it's global. The Fed can't build more houses. The Reserve Bank of Australia can't unblock shipping lanes. And the European Central Bank can't prevent wildfires or droughts. We're in a new era, where the old monetary tools don't work like they used to. And even central banks are starting to admit it. This isn't just about money anymore. It's about logistics, politics, and climate. All right, so who benefits from inflation? And who's getting crushed by it? Winners. Homeowners. Your house is worth more. If you locked in a fixed mortgage, you're paying yesterday's rates with today's dollars. Governments. Inflation makes public debt easier to manage. Corporations. Many are raising prices, boosting profits, and getting away with it. Renters. With home prices and mortgage rates up, renting is often the only option, and it's not cheap. Savers. If your cash isn't growing, it's shrinking. Low-income families. Essentials like food, fuel, and transportation take up more of their budget, and prices have risen faster than wages. Inflation quietly shifts wealth. It moves value from people who hold cash to people who hold assets. It punishes discipline, rewards debt, and deepens inequality. So what can you actually do about it? Let's talk strategy. First, invest in assets that grow. That might mean stocks, property, or even building a side hustle. Anything that has the potential to outpace inflation. Second, be a smarter consumer. Spot the tricks, shrinkflation, hidden fees, unnecessary upgrades. Don't let inflation sneak past you without noticing. Third, protect your income. Look for jobs or clients in inflation-resistant industries, or even overseas. A freelancer in Australia getting paid in US dollars might actually benefit from currency shifts. And finally, don't let inflation shrink your mindset. The biggest danger isn't the price hike. It's the slow erosion of your ambition, your drive, your ability to think long-term. Don't let it happen. Keep playing offense. So, why does everything cost more in 2025? Because we're living in the aftermath of broken systems. COVID, supply shocks, tariffs, climate, outdated policy. Scene 2. inflation as a recalibration. Inflation isn't just a blip, it's a recalibration of how the economy works. This is FinTech Central. If you learned something new, hit like, subscribe, and drop a comment below. What price hike hit the hardest in 2025? And don't miss the next videos. Is a recession coming? And how inflation is quietly destroying the middle class. Until next time, stay smart, stay informed, and keep building.